You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Thursday, March 21st, 2019. This is your Options News Rundown. I'm Dan Passarelli. The first story of the day comes by way of investing.com. It's the top 5 things to know in the market on Thursday. First is futures pointed to a subdued open, and Treasury yields hit a 1-year low after the Fed pivot. The Federal Reserve took a 2019 rate hike off the table on Wednesday and released details of a plan to end the monthly reduction of its balance sheet. The decision was a market about face from its prior December forecasts to raise interest rates twice this year. Although U.S. stocks turned positive after the decision, financial stocks dragged on the market due to their sensitivity to low interest rates, leaving the Dow lower at the close. The market's cautious stance continued to reign on Thursday, with U.S. futures stuck around the unchanged mark. 10-year Treasury yields reacted most to the change in policy stance, dropping as far as 2.51%. to their lowest level since January of 2018. The U.S. dollar initially fell over 0.5% in reaction to the Fed's decision, but recovered during Asian market hours as worries over a disorderly Brexit took its toll on sterling. The second thing to know today is U.S.-China trade talks progress without progress. U.S. President Trump warned on Wednesday that he will keep tariffs on China in place until he is sure that Beijing is complying with the terms of any trade agreement. Overnight, however, China sounded more positive on trade developments, confirming that high-level talks will continue next week. The Chinese Commerce Ministry said that U.S. Trade Representative Robert Lighthizer and U.S. Treasury Secretary Steven Mnuchin will travel to Beijing on March 28th and 9th, while China's Vice Premier Liu He will then travel to Washington in early April. The third thing to know today is U.S. preps for a decision on Brexit tension. With the current March 28th deadline for the UK to depart the European Union running down to the wire, British Prime Minister Theresa May is scheduled to meet with the bloc's 27 other heads of government at the EU summit at 10 a.m. Eastern. May is currently seeking an extension until June 30th to work further on a withdrawal agreement. However, the other member states must approve such an extension. Reports suggest that they will only allow the deadline to be pushed back until May 22nd, the day before elections to the European Parliament. The fourth thing to know today is oil holds above $60 despite profit taking. Oil prices slipped back from 2019 highs, but U.S. crude remained above the $60 level it reached a day earlier for the first time since November. U.S. crude oil futures fell 12 cents, or 0.2% to $60.11 by 5:46 Eastern Time a.m., while Brent oil traded down 3 cents to $68.47. Despite profit-taking on Thursday, WTI is still up more than 5% this month and has skyrocketed more than 30% in 2019 on support from production cuts from OPEC and its allies led by Russia. U.S. sanctions on Iran and Venezuela have also served to support oil prices, while last week saw the largest decline in U.S. stockpiles since July, giving further evidence that the market is responding to a tightening of supply. The fifth thing to know today is Nike profit is seen rising. The big earnings report on Thursday comes after the close, when an athletic shoe, apparel, and equipment maker, Nike, reports fiscal third quarter earnings. Nike is expected to report 64 cents a share in earnings for the quarter. That's down from 68 cents a year ago. This is according to analysts polled by Investing.com. Revenue for the Dow component is expected at $9.58 billion. That's up 6.7% from a year ago. The stock, up more than 16% this year, has been the sixth best Dow performer in 2019. Our second story today is from CNBC.com. Levi Strauss prices its IPO at $17 a share. Levi Strauss priced its initial public offering at $17 per share, the company announced late Wednesday. That number comes in higher than the expected range, valuing the iconic denim company at about $6.6 billion and bringing its total raise to about $623 million. The company was expected to price its offering of about 36.7 million Class A shares between $14 and $16. The stock is expected to begin trading Thursday on the New York Stock Exchange under the symbol LEVI, L-E-V-I. Our third story today comes by way of Investing.com. Philly Fed Index bounces back in March. A closely watched survey of U.S. manufacturing pointed to a rebound in the coming months Thursday as the pace of new orders picked up and input prices weakened. The Philadelphia Federal Reserve said its manufacturing index rose in March to a reading of 13.7 from minus 4.1 in February. That has been its lowest reading in 2.5 years. The consensus forecast had been for a reading of 4.6. Any reading above 0 indicates improving conditions, and below indicates worsening conditions. And our final story today is from MarketWatch.com. U.S. jobless claims fall by 9,000 to 221,000 as layoffs show no signs of rising. The number of laid-off workers who applied for unemployment benefits declined in mid-March to a one-month low, suggesting little deterioration in a robust labor market that's powered the economy over the past several years. Initial jobless claims, a rough measure of layoffs, fell by 9,000 to 221,000 in the days ended March 16th, the government said Thursday. Economists surveyed by MarketWatch had forecast claims to total 225,000. More stable monthly average claims rose by 1,000 to 225,000. The number of people already collecting unemployment benefits, known as continuing claims, fell by 27,000 to 1.7 million. And that, ladies and gentlemen, is news you can use for today, Thursday, March 21st, 2019. Your options news rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.